Good morning and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew and this is Ask Profit, the show that gets you answers to all of your stock-related questions. And I'm sure that you've got quite a few of those questions that are lined up for us, not least of which, what you should do if you booked your profits or you took money off the table at the end of last week and you're wondering whether to deploy at the current juncture because the markets are looking particularly good at the start today because of the cessation, and you can call it that at this juncture. Of course, it's been clarified that Operation Sindoor is still live and we will wait for clarification about when that does end. But as things stand right now, the equity markets are celebrating the semblance of return to normalcy, and you have the Nifty 50 that's very close to the high point of the day, up about 3% or so, and 24,700 has been hit on the charts. I was looking at when 25,000 was last hit, and that was in October of last year. And remember, the kind of drawdowns that you saw over the course of several months for the benchmark Nifty 50 started at the end of September and went on for 5 months straight. So it's looking good at this juncture. Broader markets are actually looking good as well. You have the mid-cap index that's up about 3.2% or so, and you have the small-cap index that's up about 3.7% or thereabouts. And it goes without saying, the market breadth very firmly tilted in favor of the advances. But there are a few stocks that you should watch out for. Let's first take a look at the contribution on the Nifty 50, and you have just about a couple of stocks in the red. Sun Pharmaceuticals on the back of the update from the US, the possibility of implication for pricing of generics in that market, that is having a bearing on Sun Pharma at this point, and it's losing quite a bit of ground. But it's not really moving the needle too much for the benchmark Nifty 50. ICICI Bank, which was down about 3% in trade on Friday and proved to be a little bit of a drag for the benchmark, is up there in terms of the contributors. HDFC Bank as well, Reliance Industries. So the big heavyweights are moving the needle quite substantially for the benchmark Nifty 50, which is up, as you can say, about 700 points or thereabouts at this juncture right now. But let's talk about a few stocks in the news. And you have Birla Corp, which arguably is the stock of the day. A very strong set of numbers for this company, and it's at upper circuit right now because you have a strong performance on the EBITDA front, and if anything, the PAT number was a little affected by a rise in the interest cost, and that's certainly something to watch out for. Navin Fluorine is just about flat at this point. It was up about 3% or 4% earlier on in the session, but it is given up those gains. Another strong set of numbers for this company. But I find interesting that ABB is up and about today, despite the fact that some might argue Q4 was not the best quarter for them. It's up about 4% or so. You have Dr. Reddy's Laboratories that is bucking the trend in the pharmaceutical space, and it's up about 3.8% or so. But the pharma pack as a whole is under pressure. Let's pull up, in fact, the constituents on the pharma index just to give you some perspective on what is doing what. It's changed quite dramatically from the start today, and quite a few stocks are moving higher, but the likes of Sun Pharma, Glenmark, Divi's, Lupin, losing a little bit of ground at this point. We're joined by Saurabh Jain, who's Equity Head Research at SMC Global Securities, as well as Brijesh Ayal, who's a Head of Technical and Derivatives Retail Research at IDBI Cap. Thanks so much, gentlemen, for taking the time. Pleasure having you, as always. I believe we've also got our first caller for the day. Okay, so let's first take WhatsApp while we get our callers in. And we've got Jagdish, who's writing in, Jagdish Madishetty, who's asking about Shipping Corporation of India, I believe, and he's bought at levels of 331, so elevated level. The stock is up about 5%, as is, I think, quite a raft of shares, but he's got 514 shares, and he's wondering what to do at this point. Should he book? I will come to you, Saurabh, on the fundamentals. What would you say about Shipping Corporation of India?
Hi, good morning. Thank you, Alice, for having me on the show. See, if you talk about the shipping corporation, the numbers in the last quarter was good. I mean, on the valuation side, it is quite comforting. I would put this stock into the value basket. I don't see further downside for the stocks, but if you hold for the long term, I think you may get your price. So my take would be a hold.
Okay, so hold is the view coming in on Shipping Corporation of India. Our next counter that we're talking about is Balaja Mines. Rajiv Jitendra from Qatar is writing in. He's bought 200 odd shares at 2304 a piece, sitting on a loss of around 2 lakh odd rupees right now. Wants to know as to what should be the next course of action for him. Should he sell, hold, or downward average? Brijesh, very good morning to you. I'll come to you on this one. What's the view like on charts for Balaja Mines?
Yeah, morning. So basically, the long-term charts are not that great. The stock has been correcting and it is making a lower low. So more or less, I believe this can slide little bit further. Maybe the demands on what I can see right now is somewhere close to 1,000 mark. So if this person can hold this position, then it is advisable to hold. And sooner or later, whenever it comes close to 1,000, I would suggest to do some averaging and then review the trend, because on an immediate basis, it looks weak and there can be a further downside in this counter.
Okay, so that's the view on Balaja Mines. Watch out for the levels that have been pointed out by Brijesh. But we've got our first caller of the day. We've got Ishwar calling us, I believe. Morning, Ishwar. Where are you calling from and how can we help you today?
Yeah, I am calling from Andhra Pradesh.
Okay, good morning.
Yeah, good morning, good morning.
Please go ahead.
I am holding Jyoti Lab shares of 3,000 shares at 370 rupees.
Okay.
So yeah, there are two results of these Jyoti Labs limited today. So what I need to do is that any negative results, if there is any negative results from Jyoti Labs limited from today.
Okay. So you want to know based on the fundamentals whether to hold on to Jyoti Labs or not, right?
Exactly, yeah.
Okay. All right. You bought at 370. When did you buy this, Ishwar?
Yeah, I recently bought yesterday, Friday or Thursday, like that.
Okay. All right. Saurabh. Okay. Saurabh, if you're watching Jyoti Labs and you're watching for the results, what would you look for and would you hold based on the fundamentals?
I think he should certainly wait for the results. It's a very good company. This time around, we have already have announcement of a good monsoon, and good monsoon generally boosts agrarian economy and the purchasing power, and these companies are surely to benefit. Among all the FMCG players, it is not that on the valuation side, it's not that pricier. I'm quoting it 7 times to book value. The point is that market is unhappy because in the last quarter, the earnings were not that great. I mean, there was some kind of a degrowth both quarter on quarter and year on year. I think he should wait for the management commentary. The results are likely to be announced today only. I think wait for the management commentary and then take a call. As of now, it's a hold.
Hold is the view coming on Jyoti Labs. And Saurabh, you rightly mentioned the earnings are today, so we will wait and watch as to how the commentary comes out in terms of how rural and urban is panning out for Jyoti Labs as well, because they're more concentrated towards the rural markets. All right, the next question is from Pratap, who's writing in from Delhi. His question is on Birla Corporation. He's bought 4,000 odd shares at 890 a piece. The stock is locking upper circuit today. He wants a fundamental view on this one. Saurabh, I'll come to you. Overall, great set of numbers in terms of earnings. It was a beat across segments in terms of what the street was expecting. Revenue is up 6%, EBITDA up 13%, net profit up 32%. Margins also have significantly improved. What's the view like? And fundamentally, from a longer period perspective, should the person continue to hold?
Long term, from the fundamental perspective, I think that, we have a constructive view on the infrastructure as far as cement sector. The numbers announced by the company was certainly surprised the street, because there was a 7% kind of a growth in the cement realization, and 1,000 per ton EBITDA was recorded by the company. Since the stock was saw some good selling in the recent months, that is why we are seeing good amount of buying because of the surprise in the earnings. From the long-term perspective, I think after the monsoon season, things will be great from the infrastructure activity in the second half, and thus we have call of hold on the Birla Corp.
Interesting. What was the name of the previous view? Pratap. Vivek Pratap. Okay. Vivek, congratulations, because you're making 8 lakhs on your holding today itself, and 200 rupees of gains per share at 4,000 is your, and 4,000 is the number of shares. So 8 lakhs is what you're making today. Congratulations on your purchase. And we've got a next question from Ayush, who's writing in from New Delhi, and he's asking about Titagarh Wagons, which he's bought at levels of 1,200, and he's got a 6-month time frame. The stock is up and about in trade today. very elevated levels, and some of these stocks, Brijesh, have taken a bit of a knock. It is making a comeback today. What would be the advice that you give here?
Uh, from the long-term perspective, we are bullish on this counter, and maybe somewhere close to 1,000 is what we are looking at. But the time frame may be from a year's perspective. The stock is looking good. It is making some kind of buying, and the buying structures can be seen. The volumes are picking up. It will take a little bit longer time, but then from the directional point of view, I think 1,000 is what we should be taking a target. So if we can hold for the 1,000, definitely yes. And if you want to add more at this level also, I think that should be that view can be taken.
All right, so that's the view with regards to where charts are concerned for Titagarh. Our next caller, Sandeep, is calling in. Sandeep, a very good morning to you. How can we help you?
Good morning to you and all the panelists. I have got Subex. I got 5,000 shares of Subex at the rate of 28 rupees.
Okay.
So I just wanted to know, should I hold or should I average it out?
Okay. Just wanted to understand, Sandeep, why Subex exactly? Did you research the company or you saw the charts?
I did a bit of both, and
Okay.
somehow the other it didn't materialize what I had thought, unfortunately.
Okay, interesting. Just to give a perspective to the viewers, it's a software product company which works in the space of digital trust. Brijesh, I'll quickly come to you on this particular counter, Subex. What are the charts indicating?
See, he's already taken a position. The stock is at 12.40, and what we can see is like there is some kind of base formation which is happening in this Subex. So I would advise him to hold. Let him take a stop loss at 10. So by any chance, if the stock slips below 10, then he needs to worry. So as long as the stock is trading about 10 level, there is always an opportunity, and he can bet for that 14, 15 levels on the immediate upside. Volumes are picking up, so I think he may get some positive move in this stock. Hold with the stop loss of 10.
Hold with the stop loss of 10, and it's a very small company, as Mahima has pointed out, market capitalization of less than 1,000 crore. Best to do your research very carefully when you're entering stocks like this, because they can see volatility, not least of which generally the float is not very significant. So positive developments or negative developments can lead to very sharp moves on either side. We've got Babu, who's asking a question, writing in from Mysuru and asking about Jindal Worldwide. He's got 400 shares of the company at a price of 73.8, and he's wondering whether to hold or sell at this point. He's not really specified his time frame, but Saurabh, on the fundamentals, do you have coverage? Textile companies in focus?
Won't be able to give them.
Okay. Do you have enough information, Brijesh, to give us a view on the charts?
Yeah, so this Jindal Worldwide, recently there has been some buying, so it looks okay, like not too much of bullish, but then I think that positive momentum can be there. So maybe another close to 10 points, or from the level of 70 we can see 80. So that is a resistance zone. So as of now, I think 80, 82 can be seen on chart. So that opportunity is there.
That's the view with regards to Jindal Worldwide with respect to where charts are concerned. And around 7% of their overall revenue comes from the international business. So might probably go ahead and benefit from the UK FTA that has recently taken place. All right, the next question is from Bikram, who's writing in from Kolkata. He's holding Lakshmi Dental, 400 odd quantity, bought at 410 levels. And he's a long-term investor. Saurabh, I'll come to you on this one. A fairly recently listed company. What's the view like?
Won't be able to give any comment.
Okay, Brijesh, I'm not sure if you have enough data on the charts. If you have enough data on the charts, what are the charts indicating?
So, as you rightly said, there is a very less data. So, whatever the positions are there, I think the recent low of 313, that was a low which I can see. So, that should be the stop loss, and then keep a watch on it.
Okay. Let me ask a slightly different question. And Saurabh, if you are to play, and I know that dental is not really the first option that you consider when you look at healthcare and you look at hospitals and you look at some of the new listings as well in the space. But fundamentally, if you were to talk about the broader healthcare space, beyond pharmaceuticals, beyond API, all of these, what would you buy in the hospital space?
Maybe I think Rainbow Hospital or the Metro Metro, or maybe in the diagnostic space, Thyrocare or Dr. Lal would be a better opportunity.
Got it. All right. Hopefully that gives you some perspective if you're looking to play the healthcare space. Of course, it has been watched very closely, and understandably, healthcare inflation is going up quite substantially in India. HDFC Bank has been in focus, and it's a stock that has gained quite considerably. It is up and about in trade today as much as 3.4%. If we can pull up the slightly longer term charts, in fact, let's look at the year-to-date performance of HDFC Bank, and it's been pretty good. If I remember correctly, there you go. So it's up as much as 10% this year, and from the bottom that it hit in, I think, end of Jan this year, it has moved up quite substantially. The question is from Ankit, who's writing in from Ahmedabad, and is wondering whether to enter this counter for a period of at least 2 years. So therefore, because it's a long enough time frame, Saurabh, I will ask you, and you've seen quite a few earnings come through from the banking space. HDFC Bank, would that be your pick?
I mean, surely it is a bellwether and should be in your portfolio. And for the next 2 years, I would say, rather than the next 5-10 years, it should be a good. It should do work good in your portfolio. Considering the fact that the problems with the merger are behind us, and this time also in the earnings, the banks has positively surprised the street. I feel that 14-15% kind of a CAGR return you can expect from investment in this bank.
Okay, so that's the view with regards to where HDFC Bank stands. Our next question is from Kiran, who's writing in from Hyderabad. So the question is that monsoon is coming, and is this a good time to enter something like a Rashtriya fertilizer and chemical stock? It's a PSU stock. Brijesh, I'll come to you on this one. What are the charts indicating right now for the counter, and is this the right time to enter, or should the person wait?
Yeah, I believe this can be one of the opportunity, and looks good on chart. Maybe we can talk of 20-25 points move in this counter. So 163 is the level where again the 200-day moving average is there, and recently there has been a good amount of buying which we can see in this stock. So definitely yes, 128 is a stop loss, and we'll talk of 160, 165 on the higher side.
Okay, Kiran rightly points out that it was conferred with the Navratna status. That was in August of 2023. Kudos to you for doing your research, Kiran. And I'm glad that you're looking at all of the updates here. We've got our next question on Galaxy Surfactants. Not a stock that we look at every day. And I'm glad actually that people are going broader with the purchases that they're doing. Siddharth has already bought at levels of 1,900 and he's in the green. He's saying that he's a long-term investor, but he's wondering whether he should book some profits at this point. Saurabh, on the fundamentals, what are the prospects?
I think if you look at the financials, I think there was a meager growth in the operation metrics. On the valuation front, it is quoting around 3 times to book value, which gives a bit comfort. Basically, it produces detergent, and the raw material cost, in my opinion, has come down because of the slide in the crude and the chemical prices. I feel he should wait for the quarterly numbers to come and management guidance. Till then, it is a hold.
Okay, so that's the view with regards to where Galaxy Surfactant stands. The next question is from Meenu, who's writing in from Kerala. Is this a right time to invest into Thyrocare is her question, and she's looking from a longer term perspective. Saurabh, any view on this one?
Yeah, I mean, we have a constructive view on the Thyrocare. I think the competition in this segment has abated, and in the last few quarters, we have seen a good amount of growth coming in for the players in the industry. Thyrocare is expanding smoothly in different geographies, and the margins are also improving. In my opinion, it is a hold.
Okay, all right. As an interesting question, and this is quite the question. Prakash from Chennai has recently bought BSE at a price of 3,800. Let's pull up the chart and see where it's trading right now. He's wondering whether he should book profits now and pay STCG, which is short-term capital gains tax, or should he hold for the long term and pay LTCG? Is it worth holding with an eye on that tax gain? Honestly, you shouldn't be making your purchases and booking profits based on how much tax you're paying. That isn't really the right approach. But I will go across to Brijesh on the technicals just to give you some perspective on the key levels to watch out for. Brijesh, on the charts, BSE.
So basically, this has been one of the outperformer, and recently we saw very strong move in this counter from the level of 6,000 in the recent trade, so almost 1,000 points up. So the structure is positive, and he's already making a profit. So in a situation like this, it is always advisable to take some profit and protect its capital. So I would suggest to book some partial profit booking should be done, and the momentum should be right on. So on the way up, I think 7,500, 7,800. That's the monthly outlook view. So I think that can be seen in BSE. But having said this, partial profit booking is also advisable.
Okay, partial profit booking is advisable on BSE where charts are concerned, is the view coming in from Brijesh. The next question is on JP Power, that is your Jayaprakash Power. Vikram is holding around 12,400 odd shares, bought an average price of 14.8. He wants to have a technical view on this particular counter. Brijesh, he's sitting on a loss of around 8,000 odd rupees right now. What's the view like where charts are concerned? Because it's a significant quantity that he's invested in.
He can bet for more 2 rupees on the higher side because nearer 16 and 16 and a half, there is a good amount of supply is there, which is also supported by the 200 and moving average. So I think the level of 16, 16 and a half will see some good amount of selling pressure. So I think even if it makes one point in that particular stock after its cost, I think he should take the profits and stay away.
Okay. All right. So that's the view on JP. Let's take a question on, okay, we've got, which share is, Hariom is not specified which share. Hariom, you should tell us which share you bought at levels of 533. There are several shares that are around that price. So you'll have to tell us which stock you're talking about. And Lata has got a question. It's a pretty open-ended question, but it's an interesting one. She points out, she's writing first of all from Kolkata, and she's asking Saurabh that she's a beginner and she wants to buy a few stocks right now. And I think that if you have a long enough time frame, it's a great idea to buy a handful of stocks, but probably not just one. So if you were to talk about 4 or 5 stocks that you can start your portfolio with, and of course, if you're just about starting out, maybe you should consider investing in the index, just to give you a sense of how the equity markets function. And the Nifty 50, Nifty Next 50 is a great start for you to do. But Saurabh, if you were to buy 5 stocks, which would those be right now?
He can anyway invest in bank Bs or Nifty Bs, but if he wants to invest in 4 or 5 stocks, I'll give a diversified portfolio. Maybe in the hotel space, he can invest in the Lemon Tree Hotel. In the banking space, he can invest in the ICICI Bank. In the capital goods space, he can invest in the companies like KEC or maybe Kalpataru. In the fertilizer space, she can maybe invest into the company like Chambal Fertilizer or Paradip Phosphates. And maybe she can also venture into the textile space like Wortman Textile.
Okay. Our next question is from Aditya, who's writing in from Chennai. He's bought 150 odd shares of Krishna Forging at 691 a week ago, and the intention to continue to hold, and with an intention to continue to hold it from a longer term perspective. Should I hold or sell now to minimize my losses? Is this question. Will the stock recover? Saurabh, what are the fundamentals indicating?
I think it is a very good company. I think there was some kind of a disappointment in the last earnings season. Normally, this company generally, surprises the street. But overall, the sector from the long-term perspective, the sector in the company looks good to me. I won't advise to book losses. I would rather suggest to hold.
Would suggest to hold, and this was RK Krishna Forgings. Okay, got it. We've got Satyan who's asking a question on Zaggle Prepaid. If I'm not mistaken, the stock is going to, or the company is going to post its results today. I'm not sure. I think I'll pull that out. There's quite a list of companies that are going to post their numbers today. Stock is up about 9% or thereabouts, and he's looking for a view on the charts, I believe, whether it should be bought right now. The stock is up and about in trade today, 9% or thereabouts. Brijesh, on the charts, would you venture out and buy this right now?
Yeah, no, not exactly. I would not be taking any buy trade, but since if it's taken a position, the level of 370 is a resistance zone. If that level is taken out, then he can play for another 30, 40 points. But then taking a fresh positions, I will not be very keen on. It's a downtrend kind of a stock. Sideways consolidation is what going on. I'm not very confident whether this consolidation breakout will follow. Results are there. 370 is the resistance zone. If by any chance if that level is taken out, then he can play till 400. So, but not no advice on taking any fresh longs. If somebody is having a position, just hold on.
So that's the view with regards to where Zaggle stands. And as Alex rightly mentioned, Zaggle is expected to post its earnings today. So we'll wait and watch as to how the earnings fare for the counter. All right, the next question is from Vivek Jain, who's writing in from Kolhapur. He's holding 2,219 shares of Mishtan Foods at a price of 23 odd rupees, and wants a view on this particular counter. Brijesh, I'll come to you on this one. It's a fairly small company, 500 crore market cap company. But in terms of the charts, what do you think the charts are indicating? Should he continue to hold? He's been holding this since past 2 years now.
We are talking about Manali Petro, right?
No, Mishtan Foods.
I think he's also asking about Manali Petro.
Yeah, but
we can take a view on Manali Petro then
yeah,
if he's not got a view. Yeah. Brijesh, on Manali Petro, what's the view?
Yeah, so specifically on Manali Petro, I think the view is pretty strong. The stock is forming a base formation. So sooner or later, there can be a breakout. The trigger will come once the 60 level is taken out. But I'm confident that it may take a little longer time, but 60 will be taken out and gradually it should approach 70. So it's a hold, and somebody wants to add fresh longs can also take that call. So view is positive.
okay. And any quick view on Mishtan Foods? The stock is locked in upper circuit today.
Okay. Not exactly. I think this will see some resistance. If somebody is having a position, I think profit booking is advisable.
It's a penny stock at this point, so may not be able to give you a view on that one. Guys, be very, very careful when you're buying stocks that are this value. Of course, you can make outsized gains, as some of you have done with stocks like Suzlon. This is something that has been a turnaround story, but understand that they're not as common as you would think, and you can get it wrong more often than not. Saurabh, Brijesh, do stay with us. We've got to take a very quick break. Viewers will be back on the other side to take more of your questions, so do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All right, welcome back. You're watching Ask Profit, and it is time to invite or introduce Ajit Mishra, who's Senior Vice President Research at Religare Broking. Brijesh has left us, and thank you, Brijesh, as always, for taking the time. Ajit, good morning to you. I'll come to you in just a bit. First, we've got a long-term question that's coming through from Ronak, who's writing in from Mumbai. Okay, so he's listed out a few stocks, but I'm going to pick one out of the three, and I'm picking at random. Guys, I'm going to have to restrict to one stock per viewer, or we won't be able to address as many questions as we can. Newland Laboratories is the name of the stock that I'm asking about, and he's already bought, I believe, at prices of 1,200. Saurabh, these CDMO players have of late caught the attention of a lot of investors. Would you suggest adding more to your position or holding on at this point? What's the view on the fundamentals?
If you look on the valuation side, it seems quite expensive, 11 times to book value. And if you look at the numbers, there was no growth or a bit degrowth was witnessed in the quarterly earnings. In my opinion, I think it is a bit expensive. I think wait for dips.
If you were to deploy in a CDMO player at this point, and you were positive on this pocket of pharmaceutical companies, which would it be?
As of now, nothing is coming to my mind.
Okay, all right. I do want to point out, of course, that you had Naveen Fluorine that set out today with gains of about 3% or thereabouts, but it has since then given up those gains, and rightly so. Some would argue that these stocks already have reflected in their pricing the improvement that was anticipated in the fourth quarter, and that has actually played out as well.
Absolutely. The next counter also that we're talking about is on the back of its earnings, right? It's Thermax. Pradeep Kumar from Hyderabad wants to invest around 2 lakh rupees in Thermax from a 3 to 5 year perspective, but he wants to know if this is the right time to make an entry or not. Ajit, I'll come to you on this one. In terms of earnings, overall revenue and margins were largely in line, but net profit was a miss in terms of its estimates. Revenue growth was led by the industrial products and chemical segments. The stock is not doing much in trade today. Do you think this is the right time to make an entry in Thermax or wait?
Yeah, good morning, Mahima. So, Mahima, yes, it seems like a good price because it's almost like 45-50% retracement from the record highs. The stock has been strongly maintaining above its major averages on the weekly charts around 3,000 levels for almost 2-3 months now. Volumes have dried up, so that indicates that sellers are also exhausted. So yes, he can consider accumulating in this range 3,000, 3,200 with a view of 2 to 3 years.
All right. So we've got a question from Abhineet, who's writing in from Bengaluru, and he's got 300 shares of Varun Beverages Limited, which he's bought at levels of 544, he says. He's incurring a bit of a loss, so the stock is bouncing back just a tad bit, up about 3% at this point. And he's wondering what to do. He's not really specified a time frame, so Ajit, I'll come back to you on this one. Varun Beverages, would you hold, and what are the key levels to watch out for, both on the downside as well as on the upside?
So, Alex, if you would see that the stock has been witnessing volatile swing for almost 2-3 months now, means from 580 to 420 and then again to the previous swing highs. As of now, it's trading below all its key averages. It's not a good sign, but yes, at the same time, due to the oversold position, we are seeing recovery. His buying price, coincides with the long-term averages around 540, 545 area. So if the view is short-term, I would recommend him maintaining a stop at 490 and use any recovery towards the long-term averages around 540 area, the buying price. He should review his position again.
So that's the view with regards to where Varun Beverages stand. Our next question is from Venkatesh, who's writing in from Chennai. He's holding Sonata Software, 53 odd shares, bought at 436 at an average price. He wants a long-term view on this particular counter from 2 to 3 years perspective. Should he accumulate or hold is his view? Saurabh, I'll come to you on this one. In terms of overall earnings for Sonata Software, there was a client ramp down which was seen, and there were delay in terms of the overall implementation of projects as well. What's the view like? Should he continue to hold or even accumulate more at this point of time?
In fact, even for the bigger companies, the same thing is happening. Discretionary spending is nowhere, and there has been a delay in terms of implementing the projects. So it's a relatively smaller company. Our view is a bit negative on the IT sector. We feel that even the bigger companies will grow at a slower pace, and the high growth IT companies will also see the similar will see the similar things. In my opinion, I think it is better to get out closer to your buy price.
Question on Bajaj Finance. It's an interesting one. I'm going to ask Mahima to try and pull up the X date if it's come through. But if I remember correctly, Saurabh, it is along with the split and the bonus, if you account for both of them, you will end up with 10 shares for every share held. That is at the maths that I remember. Maybe you will have a better recollection of it. But we've got Mahalakshmi, who's writing in from Hyderabad, who's bought in an average price of 8,219. And she's got 9 shares. She's wondering whether to exit right now or wait for the corporate action to take place. And what's your view on the fundamentals as well?
I think the corporate action generally favors in terms of 2-3 percentage points because the stock price will get reduced and there will be more active trading activity. From the fundamental perspective, I think the company is putting up a good show. The numbers were improving in the last quarter earnings season. Also, the company surprised it positively. So, from the fundamental perspective, it is good to hold. But if your view seems to be a bit tactical, so in that sense, she can wait for the corporate action to pan out.
So the one thing that was not liked by the street though, Saurabh, with regard to Bajaj Finance Q4 is the outlook going forward. Seemingly the trajectory of growth that this company was used to will not take place anymore, but you're talking about a higher base. You're comfortable with that trajectory of growth that they've announced?
See, the management is quite good. I mean, investors do have a good faith in the management. When the management is guided, I mean, then I think from the stock price perspective, it is quite evident that the street is happy with it.
Okay, so that's the overall view with regards to where Bajaj Finance stands. And as Alex rightly mentioned, the ratio will be 1:10, considering both the split as well as the bonus. All right, our next caller, Kalyan, is calling in from Chennai. Kalyan, a very good morning to you. How can we help you?
Yeah, I hold 13,000 shares of OMGC, which I bought at 154.
Okay.
I made quite a money, but should I hold it on or what is the short for OMGC?
Okay, just wanted to understand, when did you buy these shares, because it's quite a significant quantity and you're sitting on a significant profit of 11 lakh rupees, and what was the purpose behind buying ONGC?
No, at that time I bought it because it was a good share.
Okay.
But now I want to decide whether there are better opportunities.
Okay, so you want to exit the counter, is it?
I'm not. I want to evaluate, do I have a better exit option?
Okay, better exit options. All right. I'll quickly come to you, Saurabh, on this one. What's the view like on ONGC? Should he continue to hold at this point of time, or should he wait for further upside and then book his profits? He's sitting on a profit of 11 lakh rupees, by the way.
Yeah, in my opinion, he should book profits because the crude has come down and the outlook is not that great for the crude prices. And since the company is a producer of the crude, the company's profitability will be surely impacted. So my view is better to take money off the table.
Where would you deploy? So if you are taking money off the table and if you're taking it out of explorers or a crude sensitive stock upstream like ONGC, then where would you deploy it?
I think industrials, banking and hotels make sense. For example, Lemon Tree, L&T or ICICI banks make sense.
Okay, all right. So those 3 stocks you should watch out for, Kalyan. And I wish you luck, or I wish you good fortune, considering the kind of gains that you've made with ONGC and the patience that you've had with this stock. 13,000 shares being held through pretty tough times actually, and you've made your money. All right, John's got the next question. Biocon is the name of the counter that he's holding. He's bought 200 shares at 390 rupees and he's looking for advice for the long term. 390 is the buy price, 328. The stock has posted its numbers already. What did you make of the Q4 numbers, Saurabh, and would you hold for the long term?
In the long term, if you see in the last 12 years, the stock has done nothing. So in my opinion, I think there is no point in chipping with the company. As far as pharma sector is concerned, I think the recent statement by the US government also based on the sentiments. So my take, it is better to take money off the table. I'll suggest move money to the banking or industrials.
Okay, all right. So that's the view on Biocon. Take money off the table. Ashish is calling us, and we've already taken a view on HDFC Bank, but I'm still going to take this question. Ashish, what would you like to know? Morning.
Good morning, sir. Actually, HDFC बैंक में मैंने 335 क्वांटिटी ऑफ शेयर खरीदा है
जी.
जो 1962.30 एवरेज प्राइस है.
हाँ.
तो मेरा जो टारगेट है वो है 1978.90.
ओके.
तो मेरा जो क्वेश्चन है, एक्चुअली मैं बहुत दिन से ये होल्ड कर रहा हूँ. मैं पिछली बार भी फोन किया था इसके रिगार्डिंग.
हाँ.
तो ये जो टारगेट किया इस वीक में ये अचीव हो पाएगा?
ओके. और आपने ये शेयर कब खरीदा था?
पिछले मंथ शायद.
ओके, ऑलराइट. और ये 1978 का जो टारगेट आपने रखा है इस पे, आपने क्या देख के आपने टारगेट लगाया था?
एक्चुअली मैं इंट्राडे ले रहा था.
हाँ.
तो उधर पे थोड़ा मेरा मिस्टेक हो गया. इंट्राडे में ट्रेड लेने के लिए.
हाँ.
तो मार्केट डाउन हो गया, मैंने ऊपर का ऑर्डर ब्लॉक से बाई कर लिया.
अंडरस्टूड.
जो मुझे सेल करना था.
अंडरस्टूड. ओके. तो आपको पता करना है कि इस हफ्ते में आपका 1978 हिट हो सकता है क्या? ठीक है. ओके. सो अजीत, यू हर्ड द क्वेश्चन. 3.5% टुडे itself, and it's not too far away actually. So is that possible?
Yeah, Alex. So in fact, I can recall that he called us earlier also during the show, and the same target. Basically, the previous swing high, the record high, is something that he's eyeing as a target area. It's been almost 2 weeks now that he has been holding this position, but I would recommend always that when you are trading, if you're sure about your targets, like you are very particular about your targets, you should be clear about your stop losses as well. Means if you are eyeing, let's say 2-3% kind of a gains, then 1%, 1.5% should be your stop loss as well. Fortunately, the stock has come back strongly because the banking as a sector has been doing well. Now, at least he should maintain a stop loss at 1940, basis his upside potential. If he wants to exit, exactly at the price that he have mentioned. Otherwise, he can in fact review his position because the overall banking as a space looks upbeat to us. After Friday's decline, we are seeing noticeable recovery across the board. So, in fact, he can review his level and keep on trading his stop losses on every rise. As of now, 1940 should be a stop loss and he can hold his position.
Okay, continue to hold is the view coming in on chats. And Ajit, I must say you have a strong memory. All right, our next question is from Dilip, who's calling in from Hyderabad. Dilip, a very good morning to you. How can we help you?
Yeah, good morning. So I have a question regarding Gravita India.
Okay.
So I got 400 shares at the price of 1895 rupees.
Okay.
I'm looking for 6 months view on this.
Okay, so you want a technical view on this particular counter. Ajit, I'll take this up with you. In terms of the fundamentals, it was a steady quarter, in terms of Q4 FY25, but what are the charts indicating for the next 6 months? Should he continue to hold?
Yes, so in fact, Mahima has been a very steady performer. If you will see, on the multiple time frame, it's just that for almost 5-6 months now, it's been trading in a corrective phase. But the pace of decline has been gradual and it has rebounded very strongly once it tested the major supports around 1400 mark. I believe that the stock is set for the next leg of the move once we cross this barrier around 2000 mark. So since its view is 6 months, I would recommend maintaining a stop at 1600 now and 2600, 2800 as a positional target in the next 3 to 6 months.
Right, I'm coming back to you, Ajit, on this next one. And Revati from Madanappalle in Andhra Pradesh is asking about IRFC. IRFC is the name of the stock that she's bought. She's bought at levels of 28 and she's wondering whether to book profits at this point because she's holding quite a substantial chunk. 1,970 is the number of shares that she has and she's wondering whether to take money off the table. What's the view?
So, Alex, we all know the kind of euphoric move that we saw in the railway stock in the past, and it's been almost like 8-9 months now that we are seeing corrective pace. The good part is that at least the pace of decline has subsided. The stock has been hovering in a tight band. So at least she should book partial profit because his buying price was very low, and she can think about expanding her portfolio also to the other sectors. So as of now, yes, partially profit can be booked. And once, let's say, we cross this 135, 140 barrier, we might again see a momentum towards 160 area.
So that's it with regards to RFC. Our next question is from Ramesh, who's writing in from Hyderabad, and he wants to know whether this is the right time to enter into Sona BLW. Your quick view, Ajit, on this?
Sona, so I feel that we are at the immediate resistance. 520, 525 area is a very strong resistance for Sona Comstar. So at least wait for a decisive close for a day or two once we cross this barrier of 520. Then you can definitely consider, because 500 in that case would be a stop loss and 560 would be your immediate target.
Much for that. It's time to shift focus back to earnings, and we've been getting you management commentary. This is an auto ancillary company that is in focus. Motherson is the name of the company we're talking about. Punit joining in to speak to the management, also give you some perspective on the numbers. Punit, how did they look?
Well, numbers were largely in line, Alex. Revenues grown by about 12%, coming at 2,509 crores, and this also included some cost from the greenfield as well, so revenue impact was there. And we saw, EBITDA was down 7% and net profit was down 14%. That's largely because of the 3 new greenfield plants. And we've spoken to the management, about it and what led to these costs and what's the outlook for these 3 plants as well. So let's go across to the management. We have Mahendra Chhabra, who's joining in, the current MD of Motherson Wiring. Mr. Chhabra, a very good morning to you, sir. Just I wanted to start off first essentially with the question on margins, because that's been hit because of the greenfield facilities. In the presentation, you mentioned that one of the facilities has come on stream. Is that the Pune plant? And I just wanted to understand, is this the first full quarter for the Pune plant, or was there any partial operations in this particular quarter from the same?
In the Pune plant, there are 2 projects. One has been implemented in Q2 of last year, and another one is in the Q4 of last year. So in the Q4 also, it has been partially. The full impact will come in this Q1, but the ramp up has happened in the Q4.
So I also want to understand, like in the similar quarter, in the previous quarter as well, we'd seen a hit on margins because of this aspect as well. Could you just talk us through what's the hit on because of the startup cost in this particular quarter? What's the exact hit because of that in this particular quarter? Because is it from all the 3 plants that we've seen, or we've seen because the Pune plant has started to give revenue as well, that it's only the Pune plant and the costs associated with that?
When the greenfield starts, it happens in the phases. If you can see that in these 3 greenfield, you have to start, once the greenfield start, you have to do a lot of pilot runs also, and you have to hire the manpower upfront to start training them, so that they can, when the SOP starts happening, at that time they can give the full productivity. You have to put all your machines, infrastructure, everything in advance, so that when the SOP hits, you have all the infrastructure in place. So for the Pune plant, that has been started in Q1, which was earlier of the FY for 24-25. For the other 2 plants, it has been already started in Q4, Q3, Q4, and even in the Q1 also, because there is SOP is going to happen of one plant in Q1, another one in Q2 of FY26. So this is not something which happens only in a stipulated period of time. It happens over a spread of time when you are doing a lot of advance investment into these plants, to when the productivity hits or when the SOP hits, at that time you can give it with the full productivity.
So you also mentioned about the revenue potential in the previous quarter. Could you just quantify it? You had mentioned 2,000 crores from these 3 plants. How much could be the revenue potential from these in FY26? Because the 2,000 was, of course, a cumulative time frame.
As I explained, that these 2 plants, one is going to happen in Q1 of FY26, another one in Q2 of FY26. So you can see that 2,000 odd crores on annualized basis start giving the revenue in H2 onwards, backed by whatever the volumes customer has suggested, if they're going to produce those numbers.
Mr. Gaylord, let me just take a step back and look at FY25, because you had roughly 60% of your overall revenues come from passenger vehicles. roughly 13% from two-wheelers, 10% from commercial vehicles and trucks. So just want to understand, since you are one of the largest players in wiring harnesses for PVs, what would be your current market share essentially in this particular market, both for passenger vehicles as well as for two-wheelers, if you can quantify?
See, as a company, we don't work on the market share. Our belief is that we will not lose any of the business because of the capability. We are backed by two of our parents. One is the Sumitomo Japan, and another side is Samil. Sumitomo is the world largest wiring harness manufacturer. Other side is Samil. So on the technology front, we are capable enough to handle any of the product which is going to happen. And other side, Samil, which is giving us backed by all the components, the wires, and the help on the white collars as well. So we don't follow only onto the share of business. Our focus remains on to work very closely with the customer. Don't lose any business because of the capability or any other issues. And if you see that focus only makes us that we are 60% our revenue growth comes from the passenger vehicle. And obviously passenger vehicle volumes are also in line to that the ratio comes as 60% of our revenue there.
Well, the question on market share was essentially because you mentioned in the presentation as well that you're already supplying to 9 out of the 10 companies that operate in India, which is the largest one in PVs. So revenue growth essentially will come only from volume growth as well as the industry growth, and that has been hampered in FY25 rather than any kind of new customer addition in passenger cars. So specifically, how should we see revenue growth for you in FY26?
See, if you compare of FY24-25 with the previous year, the passenger vehicle has grown by 5% around. And also, as a company, we are very much, ready to work on the customer volumes. Customer has suggested that we don't doubt their volumes at all. So we see whatever they are suggesting for FY26, we are completely ready for that. And that's what in line to that only our expansion has taken place in last financial year. So we are a future ready organization who is ready for the whatever the volume customer will suggest, we will take care for that.
And one last question, Mr. Gehlot, was on two-wheelers. That's 13% of your revenues for FY25. Now, we've seen that market outgrow and outpace the growth versus passenger cars in FY25. But the domestic share has been falling slightly for motorcycles. So just want to understand, since you mentioned that you don't give market share data, how should we look at that revenue growth? Is it expected to be faster compared to your traditional passenger vehicle wire and harness market?
See, there are two types of customers in two-wheeler. One is the established customer, which are there from last many decades in the country. And on the EV front, there are new customers which are coming up. So first I'll talk about the established customer. We are working with them from last 4 decades. And we are very happy to tell you that we are proud also to be part of their journey. And we are closely working with them, all the new models also. As you rightly said that the growth has was very good in FY24-25, and so our revenues were also. For the EV, where the new generation customer is also coming up in the two-wheeler, we are working very closely with them. Few of them we are already metallized the product, and we are a part of their mass supplies also. And for few more, we are working on their proto, and I think in the future we'll be part of their journey as well.
Well, Mr. Gehlot, thanks so much for joining in, giving us a whole host of views for Motherson Wiring in Q4 as well as FY26. But, Alex, largely the stock not reacting that much today, but that's largely because the growth has essentially just gone into funding and getting impacted by the newer plants. But, very interesting one nonetheless.
Especially because they're catering to forward-looking automotive businesses as well, which is an interesting one to track. Thanks so much, Punit, for joining in. Keep that on your radar. An interesting chat, of course, with the management. Let's take our next question, and this is from Harsha, who points out that he's writing in from Virar, and he's clarifying that Virar is in Maharashtra. Harsha, we're aware. We're Mumbai folks, so we're quite aware of where Virar is. But you've got 250 shares of 600 at 670 of SJS, and you're wondering whether to buy for the long term or to hold at this juncture. Saurabh, view on SJS?
Won't be able to give.
Okay. Ajit, on the charts, SJS end up about 4.5% at 1,076. So he's in the green comfortably. So should he book or should he hold?
Alex, he should hold because this is the recent recovery. It's been among the stocks which recovered very strongly with volumes. All the major averages it has reclaimed in no time, and now we are seeing the first beige formation as well. So probably it can retest its previous swing highs close to around 1200, 1250 area. So still we have around decent room of 9 to 10% from the current levels. So with stop at 1000, if the view is short term, definitely he can hold for 1250 as a potential target.
Okay, all right, it's time to hit the rapid fire round, and this is where we throw as many questions as possible at our expert. Saurabh, Ajit, hope you're ready. The first question should be an easy one to answer. State Bank of India, Venkat wants to know, should he buy more at the current juncture? He's bought at levels of 785. Should he sell or buy more? Ajit, on the charts?
He should add more and maintain a stop at 780.
Okay, the next question is from Tamil Selvan, who's writing in from France. His question is whether to invest in Voltas or Blue Star. And 3 months is his perspective. Ajit, your view?
Voltas would be the bet because Blue Star we have already seen move 1150 closing stop loss.
Okay, Paradeep Phosphate is the name of the counter we're looking at next, and Niranjan wants to know, he's bought at levels of 80 rupees. Should he book profits or hold for another year? Ajit, on the charts?
Hold, maintain a trailing stop at 130.
Okay, the next query is on Yes Bank. The person is holding 3,000 odd shares, bought at 31 a piece. Ajit, should he continue to hold?
Hold, now at least maintain stop at 18.
Okay, I'll give Ajit a break. Shriram Piston is the name of the counter. Shakuntala from Surat wants to know, she's bought at levels of 1,100. Should she add more at the current level of 2,261? Saurabh, on the fundamentals?
Hold, don't add.
Okay, Abhishek from Hyderabad has bought Mazagon Dock at IPO price and part stock split as well. 150 shares is his holding and 94 is his average price. Should he book profit? Saurabh, your view?
Hold.
Ami Organic or Aarti Industries, which is the better pick for the long term? Avdesh wants to know. I'm going to ask you again, Saurabh, but I think you said neither, right?
Aarti Industry.
Okay.
Okay, the next counter that we're talking about is Wellspun Living. Subramaniam from Chennai has bought 70 shares at an average price of 93. Should he accumulate more or sell now? Saurabh, your view?
Hold.
CESC, profit of 28%. Would you book at this juncture and switch to something else? Subramaniam wants to know. Ajit, on the charts?
Hold, maintain a stop at 150 for position target of 185.
Okay. All right. Unfortunately, we've run out of time on this leg of Ask Profit. Thanks so much, Saurabh, as well as Ajit, for joining us and for answering all the questions you did. Viewers, we've tried to get all of your questions answered. Of course, that is practically impossible because there are so many of them. But hopefully, the stocks that we've discussed today have benefited you in some way. There is, of course, Know Your Company lined up next. And Mahima will be back along with Harsh to take you through a company that you know quite well and you use very often. That is Swiggy. Do stay tuned.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to this show, Know Your Company. What we're going to try to get to today is Swiggy. The numbers of Q4 were out, but more than anything, believe that a deep down analysis of this company is much warranted. November 2024, the company listed at 390 rupees per share being the IPO price. I have Mahima with me, by the way. So Mahima Vachajani who will be helping us with this. But point being, 390 being the price at which the IPO price was for Swiggy, listed at around a 5% premium to that. Thereafter, the stock is down and currently sitting at 320 rupees a piece, despite it up being 2% today itself. Now, whether it's on the back of numbers or whether it's on the back of positivity, which in any case is reflecting in markets, is the question. But more than that, it's about understanding what Swiggy is about. Let me first start off by raising the questions which I want answered. Is competition the key risk to cash flow where Swiggy is concerned? Is this the one key piece? The second one is with regard to cash burn. How long and how much? This is the other key piece, because there is very little visibility or clarity with regard to how much of the cash burn will happen and for how long it will happen. And thereafter begs the question that if cash burn were to continue, would further fundraising actually be required? Is it worth investing in some of the new age tech companies is one of the other parameters that I'd want to understand. And competition definitely has better cash balances than a Swiggy has. And therefore, if cash is the only piece that's going to move the needle with regard to where Swiggy's business model is concerned, there is a risk. There is a larger risk compared to how competition is placed. It's also a fast evolving business environment. As the business environment changes nearly every other quarter, you are seeing Swiggy also adapt or change its business model. When you do that, there's just very little predictability as to what will come next. Forget about FY26. We are not sure about how maybe the next quarter or two will go. And if I were to value therefore Swiggy on the basis of some numbers put out in FY27 or FY28, how am I supposed to do that? Because there is just lack of visibility on what's going to play out in FY26 itself. And I'm not blaming Swiggy for that. I'm just breaking it up and trying to say that if the competition has the ability to pivot its business models quickly and has the cash, then Swiggy will also have to do so. And if Swiggy has to do so, then is there a risk where Swiggy is concerned? I'm not too concerned with regard to how competition is going to survive. I'm more concerned with how Swiggy is going to play everything that's panning out in this space. And therefore, if a further fundraise is required, whether they'll prefer debt, because right now they've just eliminated all debt from their balance sheet, and two, if a further fundraise is required, are they going to further dilute equity? In which case, if you're a shareholder, likely EPS will just get pushed in terms of both growth as well as visibility. So try and understand all of these. And before that, let's try and understand what Swiggy actually does and some background with regard to Swiggy. It's obviously one of the new age tech companies. I don't think it requires much introduction, but there will be some nuances which may be new. So let's try and get straight to it. Now, when I'm talking about just about the company purely, it was founded in 2014. It listed on exchanges in November of 2024. It's pioneered on-demand convenience platform. That's what it currently plays at, but it started off as a food delivery app, or rather it was one of the competitors or one of the first players within food delivery. Zomato actually entered after it with regard to food delivery. So what you want to see is that Swiggy does have the ability to be the first mover in terms of disruptive business models. There's no doubt about that. They did that with quick commerce as well. They did that with food delivery as well. But what about sustainability? Because on both of those, they were the number one player, and now they've slid to number 3 in quick commerce and number 2 in food delivery. And it's a duopoly. They continue to give up some amount of market share in food delivery as well. I mean, different reports will quantify it differently, but Zomato does have the lead in food delivery, and that's the bottom line with regard to market share. So something, again, something to know, and along with it, some concerns that I am voicing if you're an investor, shareholder, or a possible prospective investor. So something to look at. The other thing is they're going into events and services. Now, they started off saying that we're going to build this comprehensive app, which is Swiggy. But what they've started to do is now they've started to also look at building out platforms from Swiggy. So they're not only sticking to that one single app agenda, which they started off saying that they will do. They are also pivoting from what they were saying maybe 2-3 quarters ago, which is why there could be uncertainty, but that's the other piece which they've started doing, events and services. Now, everyone's going into events. Zomato has picked up Paytm's events business. They're trying to drive events through that. Other services also has plenty of competition. So in each of its businesses, there's a lot of individual and bunched up competition. Individual competition may be in delivery, where you have a Zomato alone, but bunched up competition in things like events, in things like quick commerce. There's just too much competition on all the fronts that they are competing in. So something again to keep in mind. The other piece is there's some bit of inefficiency. There's higher operating costs where Instamart is concerned. This increases losses, gives a drag to cash flow as well. Company is expecting contribution margin break-even at Q1 FY27. Earlier, the goal was Q3 FY26. There's an aggressive dark store expansion drive. This could well keep a lid with regard to how cash flows is concerned. And they've added around 1,021 odd dark stores in FY25. They continue to do this dark store expansion at a fairly healthy clip. What they're now planning to do is around 60 dark stores per quarter is what they're targeting, which roughly translates to around 250 odd dark stores every year. That's broadly the guidance that's coming through. And that's with regard to, again, quick commerce. Now, in terms of Swiggy versus Zomato, look at quick commerce in terms of the growth. This is Q4 growth that you are seeing. This is purely Q4. Kind of gives you a summary that neither are taking a very large lead in either of these. You're seeing Zomato slightly behind in food delivery on the YOY basis number, but nothing material. Even on quick commerce, they're largely even Steven. They're largely there. This is again Q4. We'll look at the larger numbers as well, try and break those down, but this is how it's playing out. Mahima, you want to kind of take over and try to give us a breakdown of how Swiggy is playing out.
Right. So in terms of cash burn also, like you rightly mentioned, the Swiggy discount has gone up to almost 24% this quarter, which is in fact even higher as compared to something like a DMart, which has been a disruptor in terms of giving a higher discount when it comes to sales of your FMCG products. In terms of the overall discount last quarter, that stood at around 20% versus that of around 22% for DMart. And this has almost doubled YOY basis, because Q4 FY24 the discount stood at around 12% which has now gone to 24%. So the previous question as to how cash burn has been already taking place. Right now Swiggy is sitting on a cash flow of around 3,300 odd basis. Will they be able to sustain going forward considering the kind of competition that is already hitting them, and will they able to roll back the kind of discounts that they've already been giving and then be able to retain the customers or not, is the likely question. In terms of the overall income statement, the overall
Mahima,
revenues also...
Apologies, before we go to income statement, I want to quickly highlight some
key competitors.
Key competitors in every space, because that's important. Let's look at firstly the food delivery space. 43% market share Swiggy, around 57 odd % market share Zomato. Then you have Magic Pay and Eat Your. Those are some of the smaller names, but broadly it's a duopoly where food delivery, core food delivery is concerned, and that's their core business. Let's now talk about Instamart. That is where competition is quite high. And let's pull out the competitors on that one. It's the quick commerce platform, operates currently in 120 cities. Those are just some of the competitors that are there. There is a Myntra now, which is starting to come through. A JioMart is coming in. Big Basket